Welcome to Sinomania.
Queen cleans house, but for whom? Beijing sells bonds. And more IPOs. The Shanghai Composite Index has gained over 700 points so far this month. It's been above 5,000 since August 23 and reached a record high Tuesday at 5,195. So far this week, the index is up slightly overall and closed at 5,168 today. The CSI 300 surge continues. The index is above 5,000 for a week, back up today to close at 5,241.228. Shanghai B shares gained nearly 3% August 30, closing at 322.23. Shanghai Bs are getting close to recovering the ground lost since the beginning of August. Shenzhen B shares show much the same pattern, with the index recovering from the slide that began last Friday to close August 30 at 737.812. In Hong Kong, the Hang Seng Index is in a sustained rise since August 20, when the State Administration of Foreign Exchange allowed direct investment in the Hong Kong market by retail investors in mainland China, who will not be subject to the annual cap currently around $50,000 imposed on Chinese residents. In my view, this means Hong Kong could be in the early stages of a major rally, and the Hang Seng could stay above 20,000 for a while. The Hang Seng Index marked a record high August 27 and closed Thursday at 23,485. The Chinese Ministry of Finance will sell 600 billion yuan, around $79 billion worth of bonds to finance the new sovereign wealth fund that will diversify China's massive foreign exchange reserves away from U.S. Treasury securities. The new investment group will be larger than Singapore's Temasek, a model of sorts for sovereign wealth funds, and could soon rival Norway's big government pension fund that invests in Norway's petrodollars. The bonds will be gradually sold so not to upset China's poorly performing government bond market, which has anticipated the debt sale for some time. Sovereign wealth funds will be one of the most important players in financial markets in years to come, according to Morgan Stanley economists, and there is already a growing suspicion of these state-controlled investment houses. China's investments into the Blackstone Group and Barclays Bank was a hot topic and the subject of earlier episodes of this show. According to the German edition of the Financial Times, on a state visit to China this week, German Chancellor Angela Merkel was told by Chinese officials that China's sovereign wealth fund was interested only in financial investments, a statement prompted by the German government's concern of possible Chinese takeover of heavily protected German industries. An update on our report on Alibaba, China's biggest e-commerce firm. The IPO of its business-to-business assets is on and set for the Hong Kong exchange. The debut could raise $1 billion and start trading as early as September. Here's an opportunity in China's dynamic and lucrative energy sector. Anton Oilfield Services of Beijing, which sells drilling equipment to Chinese oil majors, hopes to raise up to $150 million with the IPO in Hong Kong sometime early 2008. So watch out for that one. Finally, China's third largest airline, China Eastern, is close to selling a major stake to Singapore Airlines. The company has not recovered from losses during the SARS crisis and is unprofitable. Its shares traded on the New York Stock Exchange under symbol CEA until May 21, when an undisclosed major problem forced a suspension. At its frozen price, Singapore Airlines may get a bargain for an airline with excellent routes and a fleet of brand new Airbus and Boeing planes. There is renewed call to accelerate financial reforms by President Hu Jintao, who wants financial policy to be used in a more efficient way as macroeconomic controls over China's red-hot economy. Yesterday's surprise resignation of Finance Minister Jin Rencheng may be a sign of bolder financial changes to come. The press in Hong Kong and much of the world says Comrade Jin was sacked because he had a mistress and is now as part of a new purge of old Jiang Zemin cronies in anticipation of the 17th National Congress of the Communist Party of China that will convene October 15 in Beijing. But Jin Rencheng had a long and distinguished career and kept a remarkably low profile. He is not purged from the party. On the contrary, Jin will now head the Development Research Center of the State Council, a policy position of some influence. It is true, Jin was elevated to the Finance Ministry senior management under former President Jiang Zemin, but he is 63 years old, and since most government positions in China have a mandatory retirement age of 65, he could not serve another full term. The 17th Party Congress will be one to watch closely. President Hu does not currently have an apparent protege to take over when his presidency ends. There will be a lot of jockeying among Beijing Mandarins. Rumors are a woman may emerge in the top power circles. I'll see you next time!